Liebe Zuschauer, herzlich willkommen zu Inside Wall Street vom Parkett der New York Stock Exchange. Ich bin Manuel Koch und bei mir ist Mark Otto of Knight Capital. Thank you so much for joining us.
Thanks for having me back.
Mark, it's a historical week. We saw an all-time high of the Dow Jones. So what do you make of this week?
It was an exciting week. It was very euphoric this time, and we hit the new high of 15,000. I think this time, more than the last time, you saw a lot of jubilation. There was a lot of people celebrating. So it is an exciting time. The S&P 500, we're also seeing set new highs as well. What we've actually seen since we've actually broken into these new highs in the Dow and the S&P 500 is the fact that we're rotating out of defensive sectors into sectors like techs and energy, which is actually bullish as well.
Let's talk a little bit again about this feeling here on the floor. You're working here for years. I saw guys with a hat, 15,000, Dow 15,000. Is it still special?
It certainly is. I've been in here 20 years, so I've seen a lot of highs in that amount of time. However, this was the first time in a long time that they did bring out the hats, that people assembled. We were taking pictures as a group, and everybody was celebrating. So everyone's feeling really good right now, not only here in the U.S., but it certainly seems as though economies around the world are adapting some of the policies that have been successful here in the United States, and that's actually adding to that jubilation.
So why are we so high? Is it the Fed? Is it the earnings season, better economy, data? What is the reason?
I think it's a mix of all. I think certainly the QE3 Fed stimulus is having its effect. A lot of the financial stocks as of recently have done very well as well, and it's propelled the market higher. Interest rates are going to remain low until the foreseeable future. So I think it's encouraging a lot of people to spend. People spend more money when they're feeling better about the economy, and simply in the past week or two, we've seen global economies adapt rate cuts in the Eurozone. We're seeing rate cuts to all-time lows in Australia, Korea. So a lot of that may be due to the fact that they're trying to counter the yen decline. However, it is having their effect on their economies as well.
Isn't there a high risk when we see all the money coming from the Fed and maybe in 2 years they try to get the money out of the market?
Absolutely. I think everyone's sort of watching with a little bit of speculation, but I think right now everyone's sort of caught up in the rally. But looking down the pipe, when they take their foot off the gas pedal, as far as QE3 is concerned, they start winding it down. I think it's going to really matter on how they wind it down here in the United States, whether it's incremental or if all of a sudden there's a huge increase and things are looking very bullish with the job sector, and all of a sudden the unemployment rate drops to around 6.5% is what they're looking for, and they suddenly pull QE3 away. Many people think that will be just like taking the punch bowl away from the party. All of a sudden everyone's just going to start selling off. However, that is down the pipe. The here and now is the fact that everyone's feeling good about the rally.
I think it's a hard time for investors to do the right thing. We have the all-time high, but everyone is expecting a pullback. How would you act at the moment? How can investors do? What can they do?
Well, it's been very interesting, particularly since we hit these new highs. We cracked 1,600 in the S&P 500. We've been trading in this narrow channel around 1610, let's say, to 1640-ish. However, we are seeing that sector rotation. People are no longer saying, okay, I'm cautiously optimistic. I'm only going to invest in these defensive plays. Now you're seeing people being much more aggressive. They're involved in techs. They're involved in energy. So it sort of shows you that traders are wanting to be more aggressive and get more out of their money, simply because they waited on the sidelines for so long, watching this market go up. And the fact of the matter is, any pullbacks that we've seen have been shallow. Buyers are there waiting in the wings to jump in and re-enter the market. So the fact of the matter is, a lot of people are looking at that, and reports are that portfolio managers are seeing the rate cuts around the world, which is making a lot of currencies decline, and what they're doing is they're hedging their bets. They're hedging against the yen. They're hedging against the Aussie dollar. And that way they're able to actually insert themselves with equities and lower their risk.
So let's have a look at this week. We will see the retail numbers, Macy's, Walmart. Is this important for the U.S. economy?
Oh, absolutely. I mean, 2/3 of our economy is consumer spending here in the United States. So the retail sale numbers are going to be big. Everyone's going to be watching that. CPI, PPI data here as well in the United States is going to be coming out. Over in the Eurozone, we're going to be looking for the zoo indicators that are coming out. CPI data is coming out of the Eurozone, and GDP data is also coming out of the Eurozone. So there's plenty of economic data for the market to react to this week.
Do you expect a pull down soon?
I think most analysts are anticipating the fact that most people track the S&P 500 that are traders. It's just a more broad-based perspective. We're trading in that narrow range. Most people anticipate there will be some sort of a pullback, which is actually healthy for the market. You can't just go up high forever and then eventually come crashing down. So any pullback is looked to be somewhat shallow. However, it will give investors a way to insert themselves. Most people anticipate that if we fall from here, we'll probably fall back and pull back in the S&P 500s back down to that 1600 level. 1600 was a big psychological point, 1597 to 1600, which we cracked in the past few weeks, and we've been sitting above it. So first pullbacks are just 1600, 1591 as a technical level in the S&P 500 to look at if we actually breach that level.
All right. Mark Otto of Night Capital, thank you so much. I appreciate your time. Und Ihnen, liebe Zuschauer, auch vielen Dank fürs Zuschauen. Bis bald hier vom Parkett der New York Stock Exchange. Mehr Informationen auf unserer Webseite www.drf.fm.